Hey, what's going on, everybody? Welcome back to the channel. In today's video, I'm going to share with you everything that I learned, the key takeaways, if you will, after visiting 5 open houses in my local market. I'm in the Northern California area. I looked at 5 different properties ranging in price from $380,000 on up to about $635,000. Now, in this market, it is a little bit more on the expensive side, and these are what we would consider primarily starter homes. So we're looking at 1,200 to 1,700 square feet, 3-bed, 2-bath, 2-car garage, 2 of which were townhomes, so they had smaller yards. Others had fairly decent sized yards. Now, during the couple hours that I spent touring these properties, I actually got to witness the amount of activity they were getting, how many groups were coming through. I could see the quality of construction. I could see the layouts. I got an opportunity to speak with the agents and get their feedback as to what kind of activity, tour requests, and offers they're getting on the property. So I have some really good insights and key takeaways here for you. Now, if you're new to this channel, I make these videos to keep you up to date on the housing market. We talk about all sorts of stats and facts. In addition to that, I bring my anecdotal, stories to what we're doing here in the local market. If you're into that sort of thing, consider liking, subscribing, and let's just get right into the nitty gritty here. So 5 different properties. First one that I toured, this home was 3-bed, 2-bath, 1,500 square feet. It had a maybe a quarter-acre lot. It was priced around $630,000. Days on market, 90 days. So it's been 3 months on market. There are no offers, and they're priced at about $420 per square foot. Now, for the area, that's right in line with comps. But what I noticed with this particular property is that even though it was beautifully renovated inside, the exterior needed a fairly substantial amount of work. Looked like it needed a roof, or at least the roof was aging. In addition to that, in order to get to the property, there was like an alleyway. There wasn't very much parking. It was rather tight, in order to get kind of like through this windy road and up into this private alleyway in order to get back there. Property number 2, this was a brand new listing. It's 3-bed, 2-bath, 1,200 square feet, had about a quarter-acre lot. It was flat. It was very usable. It had RV access, basically your standard ranch home. It was priced at about $495 a square foot. That's actually rather high for the local market. However, there were some recent comps that have sold. The difference there is those comps, the majority, the 2 or 3 that they had were actually renovated and remodeled, while this one was a little dated. So they may be pushing the market a little bit there. That property had, at the time that I came through there, had only had 2 groups through. Now, for a brand new listing on a beautiful day, they were expecting substantially more activity, but they weren't getting it. So we're going to talk about that here in just a moment when we go to the key takeaways. The third property, now this home had actually been on the market for 6 months. It's 3 beds, 2-bath, 1,700 square feet. It's been remodeled throughout, sitting priced at about $630,000, and the price per square foot is $370. So now, arguably, that's a pretty good value in today's market. The price per square foot is below what the comps of similar size and quality are selling for. This has been remodeled, but they had no activity whatsoever. This listing is basically aging in place. So I was really curious about it. I wanted to go see it myself. Now, the challenge with this particular property when I went in there is that they not only had no groups that have come through there, but the layout was a little bit unusual. They had done an addition on the home. I don't know whether or not it was permitted, but 2 of the bedrooms were sort of elongated. They were usable space, but they were an unusual shape. They were very big and rectangular, and it just didn't flow really well. And the quality of construction in some areas needed a little bit of cleanup, if I'm being totally honest there. Fourth property, this was a townhome. It was beautiful inside. It was 3 beds, 3 full baths. It was actually it was 2,000 square feet, but you do share a wall and there is an HOA fee. It's a gated community. The HOA kept everything up. I mean, it was beautiful going in there, but you share the wall, which is why it was priced a little lower at about $550,000. Now, price per square foot on that is well under the average for the area at $275 a foot. That property was just listed and had a ton of traffic through there. I think I personally saw 3 or 4 groups as I was touring the property, but the agent had told me there were several more than that had came earlier. Last house, last but not least, This is a townhome, but it was actually a detached single-family residence. There was no shared wall, very well-maintained HOA, but an older, established community. It wasn't gated. It was a 3-bed, 2-bath, about 1,200 square feet. Now, this was actually a fixer, and it was priced under $400,000 at about $380,000, which put the average price the price per square foot at just north of $300,000. Now, this particular property, I was one of the last ones to tour it. After speaking with the agent, she had told me they had at least 20 groups through this property. And I'm going to talk about the composition of what made up that group here in just a second. So those are the 5 properties that I looked at this weekend. And I want to share with you the key takeaways in summary here on what I gathered and what I learned from these property tours. First and foremost, the median price here in the area is around $600,000, maybe a little bit over. So if you're priced below the median, you're getting significantly more activity on your listing. In other words, you're getting more tours, you're getting more calls, generally through the open houses, you're getting a lot more traffic and people coming to view it. So you have more competition, which ultimately leads to more offers, multiple offers in some cases, and even according to some of the agents I was speaking to, they were already starting to receive offers above the list price. So pricing strategically is generating a lot of traffic. In addition to that, if you're below the median, this is what's considered more affordable. So as I mentioned, the home that was priced at around $380,000 had more than 20 groups through that property. After speaking with the agent, she said that group consisted of about 50-50 investors and first-time home buyers. So in other words, the investors are looking at those properties because they can get a good yield. It's a good price point. That place needed work, so they can come in, they can buy the property with cash, clean it up, and flip it for a profit and or keep it as a rental. Whereas the first-time buyer, they were coming in looking at it from the standpoint of affordability. It's a good location. They get in. This is their first home, their starter home, if you will. They fix it up. They build a little bit of equity, and eventually they become a move-up buyer. Now, the challenge with this, obviously, at that lower price point is those like first-time home buyers, they can compete on price, but they have a very, very difficult time competing on terms because a lot of these investors, they can come in and they can stroke a check. Literally, they write a check, they pay all cash for the property, which becomes very difficult for a first-time homebuyer to compete with. The thing about those all-cash deals is that they generally come with less contingencies, they can close faster, whereas a first-time homebuyer, they may be throwing everything that they have to get down, to get into this property and get on the property ladder. But if anything goes wrong throughout the process, they may not have the muscle or the financial backing behind them to kind of work through some of those issues. In other words, they may not be able to put more money down or pay off extra debt in order to qualify for that loan. So there's more risk on the seller. So it's really kind of a tough place to be in. We have competing forces there. Now, if you're above the median, or in this case, just over $600,000, buyers are being extremely selective. So some of those properties in those listings that were aging in place, there was a few similarities or things that I noticed. One is obviously mortgage rates have gone up and they're higher price points. So your buyer pool shrinks because it's an affordability issue. The higher the price point, the higher the mortgage rates, the more expensive you're going to, that monthly mortgage payment is ultimately going to be. In addition to that, those properties that have been sitting, there's generally a factor of functional obsolescence, like the layout is unusual or it's just not modern or brought up to where we are today. And so it becomes less appealing to that buyer, to that end user, the person who wants to buy it and move into it. And so I believe, based on the conversations that I was having, is that some of these buyers, they're looking at the higher price point and they're like, well, we might get a better price per square foot. We might get a larger home, but we also are going to have to spend all this money to get into the property, have the higher mortgage payment, and we're still going to need to renovate it or update it along the way. It becomes very costly. Now, in addition to that, we have properties that are priced too high. So the price per square foot is too high. They're aging in place simply because the market is telling you that it's not worth what it's listed at. And so this is really common what happens is sellers tend to look, in the rear view mirror as to what their neighbor's home sold for, whether that was 3 months ago or, 3 years ago. And buyers are looking out the windshield, determining, hey, what does our budget look like? Where are our rates? How much money am I putting down? And, can we actually afford this? And so there is a gap, a bifurcation, if you will, between the two. And you can see that some of the ones that were sitting for longer periods of time, sellers are starting to capitulate, and we're starting to see some price reductions in those cases. Those are the key takeaways that I have for this week's video. If you found any value in it, please consider liking, subscribing. We'll see you on the next video. Take care.